Hello friends, welcome to another monthly market review. We're going to get right into it. As February ended, let's look back at stocks first. Domestic small cap, mid cap, and large cap all saw steady gains throughout the month, bringing them into positive territory for the year. The growth in large cap, as we've been talking about, has been driven primarily by the enthusiasm for AI, artificial intelligence. We've been talking about this. And yes, it's really me talking to you, not AI Dave. Or is it? Anyway, while some consolidation is likely after this recent run-up in prices, we remain constructive for the year as earnings have continued to support the move higher for this sector. How about the economy? Well, the leading economic index was weaker than expected in January, but it no longer indicates a recession according to the Conference Board. That's the group that publishes this report. The body expects the economy to remain relatively flat during the second and third quarter of the year. Now, let's take a quick look back since we're at the 2-year mark of the Russia-Ukraine war. At the start, we had big concerns about the European economy being too reliant on Russian oil. As it stands, 2 years later, Europe has essentially disentangled themselves from their historical dependence on Russian gas and therefore disallowed the Kremlin to weaponize their energy reserves. It's doubtful they'll ever be dependent on Russia again, and I doubt that the US will ever rely on China again for chips, and I'm not talking about Doritos. The bottom line, seasonality would suggest that February is the third weakest month of the year, but not this time. The stock market continued to hold strong, and volatility is expected in the months ahead as we await the Fed's decisions. How long do they pause for? When will they cut? How many cuts? Time will tell. As ever, thank you for the opportunity to serve you, for your confidence and your trust, and we'll see you next time.